obviously this wall of money, as we call it, is driving high competitiveness in all areas of real estate in Europe. What we, as a proactive value-add opportunistic investor, decided to do is that we're selling off our residential portfolio worth 1.8 or 2 billion euros within the last 24 months, because from our point of view, the competition in that special segment was extremely high, and we're now focusing the last 18 months on two kind of one niche product and one thing in the retail sector on secondary cities, where we do see that risk-adjusted returns are still okay, and where we feel comfortable with. So what we are focusing on at the moment is the kind of new niche product line everybody's now talking about, the micro living segment, talking about students, boarding house segments, etc., etc. We took this to Austria, we do it in Germany, we do it in Spain, we're looking at the Netherlands, etc., etc. So this is something what we believe where niches are still priced at a level that are fully okay. And the second thing is that we strongly believe in retail in Germany, but we buy into a spread of 3-4% to the top 7 cities in the so-called secondary cities in Germany that are mostly driven by the German Mittelstand, which is, in our opinion, one of the main differences to all other European countries, and we can find very good investment opportunities there. But yeah, being a very opportunistic value-add investor, we always try to find niches before the big boys come to that party. That's what our target is.
Well, we typically provide the finance for our clients. We source the finance for our clients to purchase. And just to give you an illustration, we're just working on a German, very large residential transaction, a very competitive area. By no means in any region that is top 7. And my client had 105 basis points best offer, so that is already quite an interesting yield. We got involved, we managed to we benchmarked it, I told him he will have to pay less than 80 bips. And we got 4 offers and one significantly below. And his answer then was, can you replicate that financing? And I say within a couple of basis points, because the market, the banking market shifts from time to time, and it has gone through a little shift recently, but I can. And he says, oh, fantastic, we can buy much more aggressively. And this is exactly what then drives investors as CORESTATE into different markets where they can see more value, because what we get a little bit myopic about Brexit and what it all means for us. I think the big risk, as I call it, is the charming Italian gentleman in the ECB having an espresso in the morning. He's a great banker. He has been trained in Goldman Sachs. He knows exactly how these things work. Looking at his balance sheet, scratching his head and saying, I wonder what happens to my balance sheet if interest rates goes up. And then he says, ooh, what have I got here? So that is for me the main risk, because then that catapults everything out there. And in secondary geographies, in markets, and I'm not working for CORESTATE, so I'm not pitching for them, but in secondary...
We can talk about it.
In secondary asset classes, where you still have the ability to create value, I think you can create a defensive position if that happens. You've created value, you've bought a little bit cheaper, you've bought a little bit better.